Hello traders, Gary Wagner here. Just about 12 noon in Honolulu, 6 o'clock in New York. It is Friday. Happy Aloha Friday, as we say on the island. 23rd day of March 2019, and this is the Daily Report for gold and silver, our weekend review, and this was an exceptional week for gold traders. We saw this market take off, moving past some critical resistance areas and then trade above them. We are finishing even on a strong note, and we'll go through the specifics of our current trade, as well as our target exits and our stop placement for next week. But first, let's go to the board. We are looking at April gold, still the most active contract, closing up $6.10 at $13.1340. Now, of course, we are long our June position of gold. That also closed up $6.10 at $13.1970. We are long from $13.05. Now, silver was down today. Silver lost a nominal amount. I'm actually going to put it in the unchanged column at $15.43. Platinum was also down today, losing about $12 or 1.5%, closing at $8.48. But traders, take a look at this. Palladium, which has been on such a tear, gave up almost $37 on the day, coming off the highs and closing at $15.21. Now, that all had a slight headwind from a mildly stronger US dollar at 96.11. But as you will see, it was predominantly buying in gold and selling in the other precious metals that accounted for changes today. Let's take a look at our technical studies. So traders, a most interesting week when it comes to metals pricing. Interesting conclusion in that gold was the only precious metal out of the complex, silver, platinum, and palladium all closing lower on the day. But here's what I'm looking at. We are long, and so what we want to really discuss in detail is where we could find some potential resistance and what our upside target is or exit strategy. We'll talk about moving the stop up next week. But here's what I'm looking at. First of all, on the very bullish side, it's the fact that we closed effectively above the 50-day average, and that really being the first time since back over a week ago. And that was followed by a pretty strong plunge back down, and you can see we've had this slow and methodical climb back up. But as you also know, I have been looking at a particular price point, Fibonacci-based price point, that I felt could provide some resistance, and we're certainly seeing that. Now, I have no doubt, I thoroughly believe this will be taken out and taken out with a vengeance, but at least for today's close, we closed above the 50-day moving average, but below 1312. That, of course, is basis April, and we'll convert that when we look at a June chart. So what we really want to see is that over the first of the week, we get a nice climb and the market moves above that, because at that point, we can begin to look at the 50-day moving average as our initial target to where we want to move our stop up, maybe 1% below that or so. The other thing that we can see when we look at this price point, as this market came up and broke above this level, that was the point that it hit its first new high of the year, which came in at around 1330. When the market started tracking back lower, although it is a very loose level of support because it certainly dips into this area, but we certainly saw this acting as a supportive point. Once the market actually broke below it, it did it very hard. It released a lot of energy and traded to these lows at around 1280. From 1280 up to 1330, our current pricing, we have had a nice steady climb over the last couple of weeks. Now, what are we looking at as an exit strategy? And so the way that I want to calculate our exit strategy is by doing a fib extension of our third wave and use the 0.618 extension as our target. And so it would look something like this. Our conclusion of the second wave came in right in this area at around 1200. From 1200, this market ran about $150 to 1350, and then we had a pretty decent retracement taking it back to about 1280. These red lines represent our starting point and our ending point of the area that we're going to account for the extension. We're then going to start it from the conclusion of 4, which of course is the beginning of 5. That takes us to 1280. When we do that, our upside target is 1374 per ounce. Now, realize that we will see some peaks and valleys during that time. That won't be straight up, but I really believe that we could see the market track that high by the conclusion of the 5th wave. And traders, that was the primary reason that I decided to go into a June position rather than in April. Now, I have received some letters from overseas that state that there wasn't enough volume in June, and also from subscribers who also had just gotten or were already long the April contract. And my answer to them is what I want to answer to anyone else in that scenario, and that is trade the April until it comes close to expiration and June starts to fill out, and then do a rollover. Rollover is simply buying the outer month, selling the current month, and pulling profits. This has been Gary Wagner, wishing you as always good trading. We will talk to you on Monday for the next daily update and review. Have a great weekend. Bye-bye.